and welcome back to the channel. Successful trade of the USD card happened today on the 6th of March 2025. Want your win rate to be a little bit higher? First of all, try all means to get rid of smaller time frames when you come to analyzing trades. So it comes like this. If you're analyzing, you start from the bigger time frames, then you scale it down, and when you are taking entries, you go from below the entry until you reach the bigger time frames. Reason being, the bigger time frames will always give you the bias, and it will never change until the market reaches that point. To this point where we took the trade using the CPC, price corrected from here. With what really happened, price went on direct and crossed over the market baseline. Price crossed twice, the first time here, the second time here, indicating that sale is stronger. And for this, with price action, we know that whenever price drops heavily, you wait for price to go to the upside, and then you follow the direction into which it fell heavily, as long as the RSI is following the same direction. So when you go back to the directional bias, this will take us back. So most certainly, if we go to the daily time frame, we shall see almost a similar move. You see that move that went aggressively, it happened also onto the daily time frame. But instantly, the daily time frame, the market crossed already with the price and signal like a few weeks back. How do you spot this move? These candles, they are properly aligned from above. You see this move when it happened on the weekly time frame, and then price went back to the upside. It crossed back and then dropped a little bit, implying that price was not ready to go back up, since on the weekly time frame price was ready to drop. We go to the smaller time frames like H4, and you look for a move to the opposite, to the same direction as the weekly and the daily time frame. This move happened over here, made like a U shape. If you see it visibly, it's like a U shape. So now what you have to look for, you have to look for an inverted shape. Like in that, you look for point in the H4 where price is below the 13. Now like here, this is the red line, as it's called the 13 EMA. Looking for any point that matches the bias of the weekly and the daily time frame, of which this is the point where it made a inverted U shape, whereby price is dropping down. So for this point, they used today to drop price. So when you go to the, again, a lower time frame like H1, it's already moving the levels to the downside. So you already have the bias from the weekly, and you're scaling down to the smaller time frame. It becomes a little bit easier for your entries, whereby you've already known where H4 is going, where the weekly is going, and now when you go to the H1, it becomes easier for you. However much price plays the up and down moves, you already know and you are aware. At the moment when this red line or the signal line will cross over into this yellow line, price 50, 200 cross happens, which means the price will drop